Welcome to the Financial Freedom Podcast with your host, Lorna Poole, sharing the secrets to creating wealth, investing, and that all-important money mindset. To find out more and accelerate your journey to financial freedom, head on over to www.lornapoole.com to get started. Welcome, everybody. Welcome to the Financial Freedom Podcast. How do you make tons of money? Trading on stocks. There's only 3 chart patterns you will ever need to do this. With me today is Wally Olopade. He is a stock market expert who has been teaching individuals how to generate income and build long-term wealth through trading and investment. Wally's approach to being successful in the stock market boils down to one thing: trading as a business. He teaches you how to view each stock as a customer and how to build a list of stocks, i.e. customers, that can help you grow your portfolio using 3 simple chart patterns. Wally, great to have you here.
Thank you. Thank you so much for having me on your show. I appreciate that.
You know, when I read this and you said trade like a business, I was like, oh, I totally get that, but I can't wait to hear how you explain this. And I can't wait to hear about what the hell are chart patterns.
Not a problem. Well, yes. So basically, a chart pattern is a way to look at stocks movement. Basically, when all the big institutions and the banks, they start buying stocks. If they're interested in stocks, they start putting money into these stocks. And every time they put money into the stocks, there are, charts that you can actually see, just like a bar chart, which will show you when prices are going higher and higher and higher. Because as they put money into the stock, they basically raise the value of that stock in a sense. And so one of the things that we have been able to do, and it's called technical analysis. So it's not anything brand new, but it's just called technical analysis, is being able to look at the pattern of the inflow and outflow of money into a particular stock just by looking at the charts. And you'll be able to tell that, hey, wait a second, there are institutions dumping a lot of money into the stock, or there's a lot of institutions taking money away from this stock or taking money out of the stock. And that should kind of give you an idea of where they expect the stock to go. And then we just follow in their footprints. So that's kind of like what a chart pattern is.
So you're kind of like forecasting what's going to happen, right?
Yes and no. It's very close, but it's really more mimicking and following. It's like, think about a big shark, and we like the tunas. And so whenever we see the big shark out there feeding on whatever it is that they're feeding on, we just kind of like follow along with them and just kind of eat the remnants behind it. So we don't really forecast. That's the job of the institutions, the Warren Buffetts and all these big guys out there who have the resources of the guys from Yale and Harvard. They do all that research to tell them which stock is a good stock to put their money into. But then once they do, we can see the footprints like, hey, wait a second, we might not know that it's Warren Buffett, but it's like somebody's putting a lot of money in this stock. It's time for us to do the same thing too.
I like the way you said follow the footprints.
Very good. Very good. And that's exactly what it is, because again, they have a lot of research. I mean, that's what they call fundamental analysis. These are the guys that look at the financial statement. They look at what the CEOs are doing. They look at what the product is. They have the time. They have the resource. They have the money to do all that stuff. Individual people like ourselves, we don't have that much time to invest in doing all that type of elaborate studies. So we let them do all the work. They put that money into it. The good news is that we can see when they put their money into it. And then we just say, hey, wait a second. If they say, hey, Warren Buffett is buying a whole bunch of shares in Apple, well, maybe there's a reason why he's buying a whole bunch of shares in Apple. And once we see that, it's like, hey, you know what? I'm going to go ahead and buy some shares in Apple too. Maybe not as big as what Warren Buffett is doing, but at least we can put $1,000, $5,000, $10,000 in that and watch how we can make money as they make money as well.
And so what are your 3 chart patterns? What one should I be following?
Sure. Very good. So basically, the most basic thing is candlesticks. There's something called candlesticks. It's very popular. Anybody can go on YouTube, research that. You'll see candlesticks. But candlesticks is like the most important pattern that is out there. And there are a bunch of different ones, but not to bore people with everything. Once you understand how to read candlesticks, you can literally, I mean, I kid you not, you can literally see to the day in some cases when they start putting money into a stock. And to the day, if they start taking money out of a stock, just by looking at those candlesticks, you'll be able to see it's like, wow, man, here's a sign. Here's a big sign that they actually put in money into this stock. Once you see that and say, hey, you know what? Maybe it's time for me to do the same thing too. And as the stock keeps on rising and rising and rising, usually there's some sign, some candlestick that will show up, and it will show that, hey, wait a second, they're taking money out of the market. And as soon as you see that too, it's like, hey, if it's good enough for them to be taking money out of the market, it's good enough for me to take my money out of the market too. So that's one sign. The other sign is something that they call patterns. And what happens is there's some time.
What? Say that again.
It's called patterns. And so it's just called patterns. That's all. That's the name they give it. And basically what that is sometimes a stock could be flat. It could be dead. Maybe it was a stock that did well and it got beaten up because of whatever might be going on with that stock. And it's just not going anywhere. And it's been, not going anywhere for years. And then all of a sudden it wakes up. Like, it could be, I think the airline companies was like that for a while, where it just didn't go anywhere for like 2, 3, 4 months. And then all of a sudden, it just started moving. And in that is something called a breakout pattern. That's what they call it, a breakout pattern, which is it's almost like a sleeping bear, where they've just been sleeping for quite some time. And then all of a sudden, you just start seeing massive activity taking place all of a sudden in these stocks that were really doing nothing for months. When you see something like that, that is something that tells you, hey, wait a second, a stock that has not been doing anything for months, all of a sudden is now beginning to move. Somebody knows something or somebody's doing something. That gives us an idea that something is happening to that stock. And then the third one is something called indicators. And all this, again, is all part of technical analysis, but it's simple indicators. Something that's one that we call an RSI. It's a relative strength to an individual stock. And all it simply does is just tells us, hey, the money flowing into that stock, is this something that is big, or is it just like a one-time kind of situation? Okay, and that's kind of like what that indicator tells us. And the stronger that indicator becomes, the more you should pay attention to that stock and possibly even put money into that stock. So those are kind of like the three different things that we look for. We look at the candlesticks, we look at the pattern, which is we want to see a stock that's been sleeping for a while and it's now just waking up. And then we want to see how strong is that indicator saying that, wait a second, this is getting stronger and stronger and stronger, that we should pay attention to that.
So it's kind of like watching racing. Follow the form, see what's doing what, and, jump on the bandwagon, right?
Absolutely. I mean, that's a very good way to describe that. It's just like that. And again, because again, we are what I call the tunas. We are the little fishes in the ocean. We don't have the resources, once again, to do the big research that these guys do. So for that reason, the reason why I say, we trade as a business, you've heard me use that term, trade as a business. Well,
so what do you mean by that? Let's talk about that. What does that mean? Explain that.
I'm glad that you asked that question, because here's what I mean by that. I've been involved in, I've been an entrepreneur. I did real estate, I bought businesses, and I trade the stock market. But the one common thing that I notice about all three of them is the principle of being successful is the same. You have to run it as a business. And what I mean by that is when you hear me say the word customers, I look at each stock as a customer. Why do I say that? Because the banks and the institutions that invest in Apple might not be the same bank as an institution that would decide to invest in, let's say, an oil company. Okay. And so what happens is the fact that every stock, these banks, they know when they want to put their money in it. It's almost kind of like a cycle, in a sense, like a season. So let's take, for instance, crops, corn. Okay. There's a season to plant corn and there's a season to harvest it. Well, during the season of planting, you don't make as much money. But when the harvest time comes, there's a lot of money to be made, because now it's time to start selling whatever they planted. Well, every stock has that same kind of thing. Apple, for instance, in the month of October, for some reason, this is when they come out with all their grand plans of what they plan on doing going the next year. So a lot of people start paying attention to Apple in October. Same thing with Google. All these tech companies, they come out somewhere around October and they start telling you, hey, here's what we have for the future. And so based on that, people's like, wow, this is really, really going to take off. Now's the time to start investing in these companies, anticipating what's going to happen next year. So once you start knowing those things, one of the things that we do then is like, hey, what are these patterns? When do they start really investing in these companies? I'll give you a very good one. In the month of February, all around the world, the one thing that most people celebrate is Valentine's Day. And so I asked people, I said, look, what companies benefit from Valentine's Day? People automatically say chocolate companies. Yes. Flower companies. Absolutely. Well, what most people don't realize is that every last week of January, leading up until February on Valentine's Day, 1-800-Flowers is a stock company. If you bought shares of 1-800-Flowers from the last week in January and you held it to right after Valentine's Day, the shares goes up in price 10, 15, 20%, in some cases up to 50%. And they've been doing this for the last 10 years, every single month of February. So once you know that kind of thing, it's like, hey, wait a second. If people are saying, hey, I want a stock that can make me 5%, 10%, 15% in the month of February, well, guess what? 1-800-Flowers is one of those type of stocks. Well, let's fast forward to the month of April. What do everybody do in the month of April? They file their taxes. Well, okay, great. Well, did you know that every month of April, companies like H&R Block, their stock prices starts going up in price? Why? Because this is when everybody files their taxes. Okay, so once you start knowing these little patterns, it's like, wait a second, my customer in the month of February is 1-800-Flowers. And in the month of April, my customer is H&R Block. And that's what I mean by running it as a business. The good news is that 1-800-Flowers is not the only company that does that in the month of February. H&R Block is not the only company that does it in the month of April. And every single month of the year, there are companies that have those same type of patterns. So our job as traders, the business of trading is, let's go out there and find these customers for each month. What type of stocks move up in the month of January? What type of stocks does it in February and in March? And we just keep on doing that. And once you know those customers, then it's just a matter of like saying, hey, we are approaching June now. It's like, what stocks in the month of June tend to go up in price for the last 10 years? Once we know that, that's a new customer. Then we go in the month of June and we know exactly what stocks we want to buy because we've been seeing it do the same thing over and over and over for the last 10 years. That's what I mean by trading as a business.
I get that. Trading as a business and following the patterns. And, you know, that's clever when you talk about the flowers for Valentine's and chocolate and then Apple comes out in October. I mean, it makes perfectly sense, right? They're going to be a bit of a buzz around those times.
You would be amazed to see. I mean, it's overwhelming. It almost seems like, nah, this can't be. But at the same time, it's like, wait a second, why is it that nobody's been talking about this? And it's not that it hasn't been talked about. It's, in the trading industry, people know about it. But the problem is people don't take the time to say, let me do my research to find out which companies move every single month. But once you know that information, then just keep a record of that. And then they just become, I tell people, I say, look, how many customers do you need? You need 10 stocks that can move 5 to 10%, 20% every month, because for whatever reason, that's the month that they do the best. Once you have that list for that month, good. Get the next month and get the next month and get the next month all the way to the end of the year. Once you're done with that, now the good thing is everybody can trade it. We don't have to compete against, if you decide to jump into the same stocks and I try to jump into the same stocks, the good news is like, it's so big, there's a piece of pie for everybody to share from. And also the other thing is we don't have to wait for like 20 years, 10 years, 20 years to make a decent profit out of it. This is something that just happens within a short period of time. Most of them are between 2 weeks to 4 weeks. That's it. 2 to 4 weeks. And so once you know that, it's like, hey, wait a second. If I want to make a 10% return on my money within the next 2 to 4 weeks, in the month of February, 1-800-Flowers by far is one of the stocks that you have to have. In the month of April, May, by far, H&R Block is a stock that you in
If
October.
you're doing that, are you not switching up your portfolio too much, or messing around too much? Will it catch you out?
Well, no, yes and no. So, nothing ever lasts forever. Okay.
No.
So one of the things is that, some companies go out of business, they go out of style. But you see, remember when I said those 3 patterns? That's where those 3 patterns become important. Because if 1-800-Flowers decide, just because 1-800-Flowers has been doing it for the last 10 years, and they did it again this year, by the way, they went up 18% this year. Just because they did it this year doesn't mean it's guaranteed that they'll do it in 2019. But here's the thing. What you will find out is once you know those patterns that I talked about, the indicators, the patterns, the candlesticks, right before they begin moving, they would display those same things again. They will display that candlestick. They will display that indicator, will start showing strength. Once you start seeing that strength in that indicator, you start seeing that candlestick pattern show up again. And it's just amazing how, like, right at the end of January, the indicator starts popping up. It's like, oh, wow, it's popping up again. That will tell you, wait a second, it's about to do it again this year. If for whatever reason it doesn't, then hey, wait a second, 1-800-Flowers is not popping up when it's supposed to this year. Maybe something is wrong. The investors are not willing to get into it. The bankers and institutions are not willing to get into the stock this year. For whatever reason, we don't care about that. We just know they're not getting into it. We don't invest in it. And this is why we build a list. So that if 1-800-Flowers doesn't work this year, well, then we go to our other 9 customers that we have.
What about people's emotions getting in the way, or, not trusting your gut and sticking with the same thing and all that kind of stuff? Does that not get in the way?
Yes. So for a lot of what I call amateur traders, yes, it does get in the way. But as a professional trader, you should not let it get into the way, because at the end of the day, you
have to be factual, right?
Exactly. There you go. You hit the hammer on the nail. It's data. It's data driven. Okay. And so once you see the data there and you know that it's ready to do the same thing, then you just act upon it. You don't let emotions get in the way. And that's the biggest thing about it. It's like, take emotions out of it. And that's what I love about this. It takes the emotion out of it. The data is there. That's what you go by. If you're wrong, you can know it very quickly and say, wait a second, it's supposed to be going up. It's not. Something is wrong. You get out. Pure and simple. No emotions. You take all the emotions. That's the first thing they even tell you in real estate. It's a rule number 1, never fall in love with a property. You take the emotions out of it. Never fall in love with a stock. Never fall in love with a business. You take the emotion out of it. Treat it as a business.
Yeah, has to be making profit.
Yes.
Yeah. And that's what I love about anything money. It's factual, it's numbers, it's there in front of you. And it is what it is. In black and white.
Correct.
Yeah. This has been amazing, Wally. Tell us this, for anybody who's getting into this, what is the most important thing of what you've shared today? Do this one thing. Okay.
The one thing that I would absolutely say that you have to do if you were to get into this is you got to learn how to read the patterns. That's by far the biggest thing. It's almost like learning to read a language. It's like a new language. When I say those patterns, technical analysis, it's like a language. So that if you're speaking to somebody in Spanish and you don't speak their language, you won't understand what they say. But once you understand it and you can read Spanish, it's like it makes total sense. Well, the stock market is really not that risky as people think it is when you understand how to read the pattern. So if there was one thing I would tell anybody, you got to learn how to read the patterns.
And where do we find out that?
Well, you can go to our website, which is rightsidetrading.com. You can find out a lot of stuff on there, rightsidetrading.com. And if anybody's interested, they can also book a 1-hour free session with me to ask any questions. And they can do so if they go to this link called bookme.so/biztrade, BIZ trade. And again, that is booknow.so/BIZTRADE.
Thank you, Wally. This has been amazing. Love the whole chart patterns, and it makes so much sense about, following the patterns, watching what's going on, And I love the way you chatted about, looking at the fact, looking at the data, and taking your emotions out of it. Because I'm sure people get, it's like when the sun's shining and when winter comes, people can get rose-tinted glasses, right? And I'm sure all that kicks in as well. So
yes.
I love what you've shared here about the 3 patterns, and I really love the aha about, look what's going on each month, what's going to be active. So thank you, Wally. This has been amazing. Thank you for being here.
Thank you. Thank you so much for letting me be on your show, and I look forward to speaking to you in the future again.
Hey everyone, remember to join us in the Private Financial Freedom Podcast Facebook group with me, your host, Lorna Poole. This is a safe haven of like-minded wealth-getting go-getters who, like you, are on their journey to creating financial freedom in their life. This is where you and I can get intimate. I can give you the support and guidance to go from where you are now to where you want to be, developing your wealth mindset and creating your financial freedom life. Join at www.facebook.com/groups The Financial Freedom Podcast. You will see the links to this on the website. It's in the show notes, or type it into the Facebook group. All you have to type in is Financial Freedom Podcast and you will see us there. Look forward to seeing you in the group. Take care. Thank you for joining us on the Financial Freedom Podcast to creating wealth, investing, and developing your money mindset. To get started today on your journey, head on over to www.lornapoole.com and grab your free course, 5 Steps to Breaking Free from Your Poverty Mindset and Accelerating Your Journey to Financial Freedom. See you there.